what I would like to share with you today is a bit pragmatic insight what the bank can do as a basically defensive strategy to surrounding environment. I would like to stress your attention about several facts. There was a lot of information concerning the market behaviors. I will not focus on that. I will just state like 4 or 5 key insights that stimulates the change of the strategy and the insights that stimulate First Ukrainian International Bank to choose the step of merge with Bank Renaissance Credit and create one legal entity with one market strategy to first cope with the environment and second build a strong foundation for the future growth. So you saw like 2 presentations ago that everyone sees the market environment as a perfect storm. We heard that it's passing. I believe that we are somewhere at the end. So there is some sun shining behind the clouds, but still the situation is quite rough. Last time we had very big screen, so sorry for the small font. So the 4 key elements that preoccupies the banking sector and the overall economic situation in Ukraine. So first of all is the GDP and overall economic stability of the state. We see that the last positive dynamics we observed like 4 years ago. Then we entered into 2 years of the stagnation, and this year we see that it's a second consecutive year with negative dynamics of GDP. Additionally, the situation is worsening by the growing inflation, yes? As Mr. President said in his presentation, it's impossible to build stable economy with double-digit inflation, and we know that we are reaching the volumes between 40–50% this year. We cannot build when we don't have stability. So first factor is economical situation. Second is the definition of Ukraine. Ukraine lost control of the 2 big regions of the country. It's painful for several reasons. For banking sector, it's painful because it creates a certain notion of lack of stability. We have the non-official war, and what's even more painful, we lost the influence on very big part of our balance sheet. When discussing with other bankers, we see that the impact of the Crimea and the East regions for the banks is around 20–30%. So if you combine the assets, liabilities, exposure in those regions, we lost the control over the 20–30% of our balance sheet. As the honest bank, First Ukrainian Bank fulfill all the obligations towards the creditors, so depositors, but the creditors, we still cope with the management of those portfolios, and we need to swallow the brick that sits in our balance sheet and basically later on results in non-performing loans. The next one is the exchange rate. We heard that we had the first step in 2008, minus 60%, and another one we have last 2 years where the deterioration reached 300% devaluation. And the last but not least is liquidity is absent on the market. We cannot build the market strategy in the banking sector without the stable medium and long-term liability sources. So international markets are closed. We heard that from the Moody's presentation. I will show you what happened with the local market. In fact, when you look at the nominal rate, the currency deposits of private individuals continuously reducing over the past 2 years. Currently, when we compare the peak to the bottom, we lost 55% of the nominal value of the retail deposits. With local currency deposit, it's a bit better because we see the stabilization and slight growth in the past months, but still we lost almost 40%. So when you think about it, it's a disastrous impact on the banking sector and stability of the balance sheet and ability to enter in even medium-term lending strategies in the bank. So what we can do as a banks? So there are 4 major strategies that the banks execute in the past 2 years. The one is quite easy, exit strategy. We see how many banks went out of the market. And it's not only the small banks that were not involved in the basically systematic banking business, but we also have 2-3 examples, really first-class banks that entered into the problem because of liquidity and the portfolio quality, that result of termination of activity and withdrawing the banking organization from the market. Second strategy that we observe is the freeze. We call it the Strauss strategy. We take the head, dig the head in the sand and wait for the stabilization and opportunity for the reactivation and entering to the path of growth. The next one is consolidation. We see that there is a big opportunity currently to take quite good assets, enter into acquisition and merger process. And the last one, there is very few banks, we can count them on, I think, fingers on one hand, that enter into moderate growth, using the opportunity to find the niche on the market, either in short-term lending or in the transactional business, and looking on the stagnation of the big banks that face the internal problems and are focusing on basically preventing the business, they found the opportunity to grow, but it's really numerous banks. What I would like to discuss with you today is basically the adventure that happens between First Ukrainian International Bank, it's PUMP, pierwszy ukraiński międzynarodny bank, and Bank Renaissance Credit. The story started a long time ago. The first rendezvous we had in 2009. The head of the bank that time was my friend from Poland, Rafał Juszczak, and we had a discussion how to enter into cooperation because we found the chemistry that I explain you in a second. But in fact, the first real relationship, kind of grażdański brak, happened in 2012 when SCM Group bought Renaissance Credit into the SCM Group as a first step into growth strategy and entering into consumer finance. Last year we entered into second step of this relationship. We decided to unify and merge those organizations. So through the business case we can see all the rationale on the acquisition during the prosperity time when you focus on the growth strategy. And currently it's a strategy of merger when you need to focus on the operational efficiency and basically consolidation of the balance sheet and equity base. So what was the 4 major prerequisites to the merger that happens in the past 1.5 years? First of all is the business synergy. I'll explain you later on the basically business mix, how the synergy works. Second is consolidation. We saw all this preoccupying information about the way how the banking sector can consume equity. So currently in Ukraine, one of the key tasks for the banks is strengthen the equity base and be ready to absorb further deterioration of the portfolios. That will happen. Let's face the situation and let's be honest, it will happen. It's happening all the time. We saw that some of the banks are more progressive in recognition of the non-performing loans, but for some of them the recognition of the non-performing loans is still the subject of the capacity of the equity to absorb the losses. So the second point was consolidation of the business model and consolidation of the equity base. The third one is growth. It's the funny one because when you think about it, the merge usually has one big task, do the same business with less resources and less OPEX. But in this business, in this case, First Ukrainian International Bank and Bank Renaissance Credit find a way to generate the growth opportunities even through the time of the crisis. And the fourth one is working with unified database of the corporate customers and the retail customers and finding the cross-sell opportunities. So I will share with you like a very brief insights. Sorry for not being too detailed because we are in the middle of the operation. So the patient is still on the table. We kind of transplanted the new heart, sew the chest, but we are still in the reanimation process. So we are somewhere in the 70% of the process realization. So I'll basically focus on the facts that already happened, and I will share the information that basically are already available as the results of the merge. So what is the merger? We know that there is a storm. So the merger process during the crisis I can basically compare to driving a boat in the storm and in the same time replacing the engine. It's difficult, but it's ultra interesting. So where is the synergy in all this merger process? When you compare two entities, first Ukrainian International Bank and Bank Renaissance Credit, we found a kind of perfect match. As I told you, the chemistry appeared in 2009 because of the business focus. There is first Ukrainian International Bank from one side with the very strong corporate business foundations, with complete business model, including investment banking, including treasury operations, processing center, acquiring business, processing, and acquiring, yes. And in the same time, the retail activities were limited to side effect of the corporates. So there is very strong competence on the salary project. There was very strong competence on the pledged lending, mortgage, auto. But there was very limited competences in terms of working with mass segment of the customers, especially in lending and mass lending in the mass segment. That was the first prerequisite to the acquisition process that happened in 2011 and 12. And as you can see, basically, currently, with the limitation of banking strategy in retail sector, the core of the Renaissance Credit, which is the short-term consumer lending, is a perfect extension for the first Ukrainian International Bank business model. As I said, the perfect match is also visible in the completeness of the offer. Completeness of the offer that First Ukrainian International Bank shows and displays and promote to the retail customers. Before the merge, First Ukrainian International Bank was focused on purely branch type of activities. Once again, sorry for the font. I expected like 3 to 4 screen. Next time I will use 3 times bigger font. So coming back to the segmentation, First Ukrainian International Bank was focused on working with the salary project through the branch model with the target to satisfy affluent, middle, and VIP customers with top quality service level. At the same time, Renaissance Credit was called mass market animal, focusing in fast and simple financial products. Today, we see that fast and simple financial product is not anymore a fast and simple financial product, it's a fast and convenient processes and fast and convenient financial service that can be allocated to all the market segments. So from one side, the merged bank got the competences on constructing and managing mass processes ready to work with the database of 1 million plus active customers. And in the same time, we keep the top quality that is a key success factor to working with the more demanding customer in the higher segments. Same time, unified bank is a good opportunity to get economies of scale with the channel development. So First Ukrainian International Bank brought to the merge quite sophisticated branch model, and Renaissance Credit brought to the model working with external partners. External partners like merchant partners in POS lending, Confi, Eldorado, Epicenter, and working with the brokers. Renaissance Credit was the leader in developing and the pioneer in developing the brokerage and agency channel, so bringing the retail customers to the banking sector through external parties, through intermediaries. So currently, we see that we have complete business models focused on internal, external sales channels. We have the complete service model based on branch and alternative channel, internet banking, ATMs, kiosks and terminals, and we have complete product offer for all segments of the customers. This we can skip, it's too small. What's the already tangible effect? So the tangible effect is unified product offer and unified network. Most probably you saw with the end of September that the brand Renaissance Credit disappeared from the market. We decided to use the brand of Pump because of its history, its place on the market, its strength. And we are going to develop and promote it further. So first tangible effect is unified product line and unified network of branches. As I told you that the merge process is very good opportunity to do the same business with less resources. That's one of the examples proving that, that statement. We entered the year 2015 with almost 220 branches. After very deep and honest analysis of the operational performance, of the location quality, we took a decision to downsize the network of the branches by almost 60 locations. And we decided to combine like 20 of them. So from the 214 branches, we are working from the end of September with only like 157. It brings a severe saving on the OPEX and the logistic complexity from one side, and from the second side, it ensures that we have the geographical presence that ensure full operational capacity to absorb the same business that we managed in the past in a much reduced space.
1 minute left.
Where we are in the process, as I told you, that operation is still ongoing. So the merge process is quite complex and long-term event in the lifetime of the organization. We estimate the duration of the project for the time between 12 to 18 months. Currently, as I told you, we're in the kind of 70%. So what's done? We went through the legal merge. We went from the organizational merge. That was quite painful because acquisitions are much more easy than mergers. Basically, there is a hunter and a victim. Here we are more or less on the same pace. We unified the offer and unified the network. Currently, there is a big operational task that is not visible for the final customer, is the basically operational merge and the system merge. It's quite complex because the architectures and the platforms were quite different in the nature and the logistic of the construction. The first results that I can share with you. So as I told you, we do the same business with much less resources. So in terms of market share in the retail business, because the basically merge happened in the retail business, we kept the market share in the retail lending. We increased the market share in liabilities. We kept and maintained the ability to recruit the customers. So we overall reduced the total number of active customers, but we absorbed the loss of the Crim and East. We lost almost 200,000 customers in those two regions. But we are able to compensate already the half of that loss, only after 10 months of the joint activities. We kept the ability to generate revenues. If we compare this year revenues to 2013, that was the best year in terms of revenues, our result is 2% better. Same time, the OPEX, the operational expenses for running the retail business is 25% less than in 2013. And last but not least, we strengthened the capital and equity base of first Ukrainian International Bank, but the equity brought from Renaissance Credit. What can I say? As I told you, we see already the harbor. We replaced the engine. So we hope that in 3 to 6 months we can share you the full effect of the merge process, and that there will be no storm in the economy. If you have some questions, I will be very grateful to answer them during the coffee break or later during the day. Thank you very much.